Ladies and gentlemen, on Wednesday we're going to get the most anticipated earnings report yet, Nvidia. Now, of course, a lot of folks, investors, analysts want to know about the Blackwell delays. Is it truly delayed? How long is it going to impact the next couple of quarters or just one quarter? Because remember, last quarter during the call, Jensen said we're going to see a lot of revenue from Blackwell in 2024. Now, with the delays, is it still expected to be 2024 or are we pushing that back towards 2025? What was the issue? How long is it going to take them to solve? Has it been solved as well? All of those things you want to hear during that earnings call. Plus, for the report itself, before the call even starts, you would like to see a beat, not just meeting expectations, but beating expectations. I don't think it's going to be that difficult to beat the expectations. I mean, if you look at Nvidia's track record, top and bottom line, they have been beating top line for quite a while now. I mean, quite a while, a couple of years. EPS, bottom line, yeah, there were two small misses. That's when Nvidia stock was actually down quite a lot, I think around $115 or so. But other than that, they have been beating expectations time and time again. And if I listen to what Dan Ives has to say...
But I believe this is going to be a drop the mic moment for the godfather of AI, Jensen Nvidia, because all of our checks are showing this is accelerating.
Safe to say that he is quite confident that they're going to beat it and beat it by quite a lot. But again, I think all the focus will be on guidance, because the guidance is what will make this highly valued company, right? It's a company worth $3.17 trillion with a forward PE of 43.2 times. It's up 183% year over year, 160% or so year to date. Now, of course, this is a company that is still expected to grow quite a lot in fiscal 25 and fiscal 26. Then by fiscal 2027, currently the expectations are that it will grow top and bottom line by around 15-16% or so. By the way, if you look at forward PE, EV to EBITDA, price to sales, price to free cash flow, that's in the last 12 months, you can see that for forward PE, we're at the 5-year mean. EV to EBITDA, we're under the 5-year mean. Price to sales, we are higher, close to 24 times, and price to free cash flow, we're about the same. But, the stock has gone up quite a lot, right? In the last 5 years, even the last 2 years, has gone up quite a lot. If we look at price earnings to growth, which basically takes into consideration what the expectations are for the future, you can see that we're right now at 1.18. 1.18, despite the stock being up so much already in the last year, year to date. 1.18 is not a lot. And if we go back to the lows of late 2022, back then, price earnings to growth was 1.68. We're up, I think it's close to 10x already, or let's say 900% or so since then, and yet the price earnings to growth is lower today. Of course, this is what we think or what analysts think will happen in the coming quarters based on the information that we have right now. Then fast forward next week, based on the information that they will give us on Wednesday, things will obviously change. Things will change 3 months from now, 6 months, 9 months, a year, 2 years from now as well. Which is why Azmat Damodaran said this.
And the way to think about NVIDIA is, are you a trader? In which case, you buy at a low price and sell at a high price. And NVIDIA might be the game you want to play. Are you an investor? Where you're buying based on earnings and cash flows? NVIDIA is an amazing company. Great growth, amazing cash flows, superb margins. But you're paying a premium price, even given all of those pluses. So I think you've got to be honest with yourself about the game you came to play.
Now, I know already a couple of people that are watching this video will say, oh, but he's been saying that Nvidia has been overvalued for quite a while. Yes, it's true. Based on his calculations, he thinks or he thought that Nvidia was previously overvalued as well. But bear in mind, he already had a position. He said it was overvalued, meaning he was not going to buy more shares. But he was riding that wave on the way up. Now, currently he also says the same thing. If you want to trade it, of course, go ahead, because the anticipation is right now that they're still going to beat the market's estimates by quite a lot. And as we've seen, they have quite a good track record. So trading it, especially trading against it, is not a good idea. Trading it right now with the current earnings, expectations, okay, could make sense. But from a long-term perspective, opening up a position today, for him, it just doesn't make sense. He said there are other options out there, talks about Amazon as well, but that will be for a separate video. And to be honest, I'm thinking about the same thing. I could be going into Wednesday's earnings by playing the earnings trade. I know, I've said previously, don't do earnings trades, rarely works. It's true, it rarely worked for me. It worked with Robinhood, did not work with plenty of others. Maybe this time, I don't know, karma, it might not work with Nvidia. But I do think that Nvidia still has a long way to go. Now, as you will see, in this video, I'll explain why. If you enjoy this type of videos, leave it a thumbs up, subscribe if not, we really appreciate that. And if you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. I'll of course start with the same meme over and over again. You've got here the state of the LLM models and then the state of the GPU market. Of course here, bold is Nvidia. Then, for those that don't know or forgot, the Q2 fiscal year 2025 outlook was basically this. Nvidia expects revenue to come in at $28 billion with gross margins between 74.8% GAAP basis and 75.5% non-GAAP. Now, the market, the analysts, according to Fact Check, they expect a revenue to come in at $28.7 billion or an increase of 112% with earnings of 65 cents a share, which would be an increase of 139%, which to be honest is truly amazing. You look at those numbers, you're like, okay, this must be a company worth $50 billion, $100 billion or so, but no, it's a company worth $3 trillion. Now, if we look a bit further down the years, we have here a couple of analysts that can model out or predict, trying to predict what will happen in January 28, 29. Of course, as the years go by, less and less analysts have projections all the way through January 2034. But if we stop here until 2028, that's where you still have 6 analysts here. They expect revenue of $225.4 billion that grew 16.3% year over year. And so you have a forward price to sales for that year, 14.1 times, which again is still very, very high. Even by 2034, growing 10% year over year, 8.3 times forward price to sales is high, is very high. If we look at EPS estimates, same thing here. Let's take January 28, $5.28, growing 18.7%. Here you have a forward PE of 24.5. Okay, that's not that expensive if you grow 18.7%. But then if you go for that one analyst in 2034, you've got here $8.41, growing close to 10% at a forward PE of 15.38 times, which again is not the most expensive. Of course, you're not growing double digits, high double digits anymore, but free cash flow generation is probably going to be quite high by then. Now, how do they reach those numbers, right? How do they reach those numbers? You probably think it's only because they're selling hardware, but no, as I've been saying for quite a while, hardware is of course the basics, the baseline, let's say. So you've got RTX, DGX, HGX, etc. That's the hardware. On top of that, you've got system software, acceleration libraries, platforms. So you've got NVIDIA AI and NVIDIA Omniverse. And then you've got all of these applications on top of it. You've got Nemo, Avatar, Drive, Isaac, Metropolis, Picasso, etc. They then give us basically every single segments here. So you've got cloud service providers and consumer internet. So that's NVIDIA HGX for them, an AI supercomputing platform purpose-built for AI. Top of that, you've got enterprise. So NVIDIA AI Enterprise is the operating system of AI. On top of that, you have, or maybe not really on top of it, but with it, you've got NVIDIA DGX Cloud, is a cloud service that allows enterprises immediate access to infrastructure and software needed to train advanced models for generative AI and other groundbreaking applications. Then, autonomous vehicles and robotics. So here you have NVIDIA Drive, is a full stack platform for autonomous vehicles that includes hardware for in-car compute, such as the Orange system on chip and the full autonomous vehicle and AI cockpit software stack. So again, it's a mix of hardware, starting with hardware, and then we've got software built on top of it. Then the last one here is industrial digitalization. NVIDIA Omniverse is a software platform for designing, building, and operating 3D and virtual world simulations. It harnesses the power of NVIDIA graphics and AI technologies and runs on Nvidia powered data centers and workstations. We've talked about Nvidia Omniverse for a long time right now. And yeah, as you will see more humanoid robots and stuff like that, I think you will start to understand all of these steps here. And so that's how they think they'll reach the $1 trillion long-term available market opportunity to them. $100 billion in gaming, $300 billion data center systems, NVIDIA AI Enterprise DigiJet Cloud, $150 billion, autonomous machines. This is not saying here autonomous vehicles, they're talking here about autonomous machines, which is vehicles and probably humanoid robots as well. Some other stuff, that's $300 billion. Then Omniverse Enterprise, $150 billion. Now, to be honest, it might sound crazy, right? $1 trillion. Not everything here will go to NVIDIA. By the way, the data center system at $300 billion, I think that side could be a bit bigger. I've heard Eric Schmidt talk about basically the hyperscalers having to spend around $300 billion each. And as we know, the market share is 90% to NVIDIA. So yeah, that's quite a lot of money going to NVIDIA for the next coming years. Then if you needed a quick reminder of what happened last quarter, so Q1 fiscal year 2025, revenue grew 18% quarter over quarter, but 262% year over year. This is something that will happen, I think, for another quarter or two, if I'm not mistaken, where year over year, it's still going to be quite a lot, or I do think it's maybe the last one where we are going to get triple digits year over year. Then gross margin, 78.4%. Don't expect it to be closer to 80%. It's going to be a bit lower, a bit towards the 75% going forward. Net income, $14.88 billion. By the way, this is on a GAAP basis, not non-GAAP. That increased 21% quarter over quarter and 628% year over year. Diluted earnings per share, about the same. Then from a market platform perspective, of course, the biggest one right now is data center. Previously, I think 2 years ago or so, that was gaming. Gaming was a little bit bigger than data center, but now $22.5 billion coming from data center, that's increasing 23% quarter over quarter, 427% year over year. Gaming was up 18% year over year, but down 8% quarter over quarter. Professional visualization up 45% year over year, but also down 8% quarter over quarter. Automotive up 11% year over year and up 17% quarter over quarter. Still only a small chunk of the overall pie. Now, last quarter, especially with regards to data center, they did talk about the H100, H200. So supply for H100 continued to improve, still constrained on H200. So it would be nice to have an update on the H200, especially if Blackwell is delayed. You would like to see supply improve also for H200. So at least during those Blackwell delays, you can ship out the H200s. Of course, they said Blackwell is in full production and they are working to bring up their system and cloud partners for global availability later this year. So as much of information on Blackwell will be well received, and I think most of the analysts are going to ask about that. Now, before ending this video, currently the average analyst price target sits at $143, representing 10.5% upside from the price we're at today, and I believe the expected move on earnings is also around 10%, which would also mean that the stock would go to all-time highs, which it has reached here mid-June at 100 and let's say $41, $42 or so. So another 10% would definitely beat that previous high. Yes, in the last couple of weeks, we of course had that Black Monday, August 5th, where the stock went under $100. If you pick that up, you're up 40% or so right now. Congratulations to you. Now, going into the earnings, I still think Nvidia has some room to grow. So for those holding Nvidia, I don't see any reason why you should sell. For those trading, yeah, I think now could be the last easy quarter, let's say, to have a trade going into the earnings report. After that, although I still think Nvidia has room to grow, after that, maybe expectations are not going to be, or expectations or the comparisons are not going to be as easy as they were now in the last couple of quarters. So do take that into consideration. Again, long term, if you have a position, I don't see why you should sell. This is the type of company that if you have to sell, then it's because the company is showing you some weakness. But right now, where is the weakness? I can't find any. So that's all you need to know. That's what I'm expecting from Nvidia on Wednesday. Do share your thoughts, what you want to hear on Wednesday down in the comment section below. Like, subscribe, do all of that, and I see you all in the next one. Bye-bye.